How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing, whether it's dividend investing or value investing. I'm going to be showing you through my personal financial journey, through the upswings, downswings, and really anything there in between. Now, just to make sure we're all on the same page here, I initially opened up my Vanguard brokerage account back in 2019. The purposes of YouTubing the entire journey. Now, I did so with initially $3,000 invested into a Vanguard index fund, and since then it's flourished into what I feel is now a rock solid dividend investment portfolio sitting at a total of $97,477.75. Lately, we had Fed Chair Powell speaking at a European Central Banking Forum, to inflationary data coming out, not to mention the commencement of the second half of 2022, all giving way some pretty uncertain times. So if it seems that your portfolio is all over the place lately, you're not alone. However, in today's video, that's all neither here nor there, because I want to go over all of the dividend income that I've received throughout the month of June. It has been another record-breaking month. And before we dive in, make sure you tap on that thumbs up button and help me grow this channel. And most importantly is subscribing to the channel, because I personally would love to have each and every one of you along for the ride with me. Now, YouTube, let's go ahead and dive right in. So just before I run you all down my dividend income, for the one-off chance that some of you out there may be new to the channel, I want to share that it's not all about me just sharing my dividend income, dividend paycheck by dividend paycheck. I go a step or two further in breaking down the actual company itself before detailing out their current metrics, and then finally I wrap us up with what I personally am thinking, whether or not I'm buying or selling or whatever may have you. Now, that being said, the very first dividend paycheck came in on June 6th from Southern Company, ticker symbol SO, which is one of the largest utility companies within the United States with a vast customer base amounting to 3.8 million customers in the residential sector, a little over 500,000 in the commercial sector, and 17 industrial customers, which is pretty incredible considering the fact that the company itself was only founded in 1945. Now, in regards to Southern Company's market capitalization, it is coming in at $79.05 billion, and given it's a utility company, it is consistently delivering through profitability, which I expect it only to continue to do so unless, a serious amount of their customers just decide not to pay their utility bills anymore.
Paul, forget about it.
As stable as a utility company can be, regardless of market conditions, they still in fact feel those tremors of the market. And of course, Southern Company's share price did fall from $77 per share down to around $71, creating about an 18% change with a PE ratio at 32.9. I'm not exactly a buyer of Southern Company right now, but certainly grateful for the dividend paycheck that they sent me for owning 10 shares. Their dividend yield sitting at 3.77%. I received a dividend paycheck for $6.90. The following day, I received my second dividend paycheck coming in from the world's healthcare leader, that is Johnson & Johnson, ticker symbol J&J. Now, personally, I don't think there's a better healthcare dividend investment out there that one can make with as much of a rich history and consistent growth as Johnson & Johnson. It was founded back in 1886. That's 136 plus years worth of a history, where throughout those years, they've amassed a market capitalization sitting at $465.73 billion. Their growth more recently has been quite impressive, even prior to the pandemic. If we go back to 2018, where they brought in $81.6 billion worth of revenue, compare that to just last year, where they brought in $94.4 billion, which translates to a 38% increase at stock share price of theirs. But it hasn't been all smooth sailing throughout the course of all this market volatility. Its share price did come down from their 52-week high of around $186 per share to a current share price of around $177 per share, creating a nominal 4.8% change. However, with a PE ratio at 23.8, Johnson & Johnson's pharmaceutical segment likely to continue to grow exponentially from their cancer drugs. Specifically, Johnson & Johnson already saw a 14% rise in sales during 2021, and their medical device segment performed even better, seeing an 18% increase in sales. I would even imagine that stronger growth metrics are to come. Well, analysts would agree, giving Johnson & Johnson an average share price of $192 per share and targeting an even higher share price of $205 per share, which is exactly why I'm going to continue to dollar cost average my way into this position. But we are here for that dividend income. So for holding 48 total shares worth of Johnson & Johnson, their current dividend yield at 4.44%, I received a dividend paycheck for $51.06. Now, a few days later on June 10th, my third dividend paycheck came in from ExxonMobil, ticker symbol XOM, the largest direct descendant of John D. Rockefeller's Standard Oil, which was established today not too long ago in 1999. And in that short amount of time, ExxonMobil has amassed a market capitalization of $371.21 billion. It's remained quite a strong performing investment as well. Yet given the direction the world is heading in, even ExxonMobil's executive team is beginning to get a little bit worried here as they focus more and more on a green business strategy pivot as the world makes its clean energy transition. Personally, I don't really foresee a transition on such a mass scale happening overnight, nor for some time. So I do believe ExxonMobil's team has some time on their hands to continue to strategize, but it should be noted as an investor into a company like ExxonMobil. Now, more recently, ExxonMobil has been taking heat for their cap on petroleum production, allowing them to really profit during some trying times. But with market conditions as they are, ExxonMobil still has experienced plenty of volatility from their high of $105 per share down to their current stock share price to $85 per share, creating a 19% change. Their PE ratio is below 20, sitting at 14.6. This may be quite a solid opportunity for the investor out there, especially with analysts foreseeing growth coming in, an average stock share price projected at $103.18, their high stock share price at $120 per share. As for me, I am currently focused elsewhere, but I do enjoy receiving a dividend from ExxonMobil for owning 3 shares worth of the company, their dividend yield sitting at 3.84%. I received a dividend paycheck for $2.72. Now, jumping to the 15th of the month, it was a double whammy with 2 dividend paychecks coming in from real estate investment trusts, which are for all intents and purposes hedges against inflation during these high inflationary periods. However, getting right back into this dividend income that I've received, the very first REIT that paid me out in a dividend during the month of June was Stag Industrial. That's ticker symbol STAG. It is a REIT that I am currently building a position with, given the e-commerce future ahead of us and Stag Industrial's focus on industrial properties with an emphasis on warehouses and distribution centers. I only really foresee explosive growth to come Stag Industrial's way. When looking at what they've actually been able to accomplish since their founding thus far, they have amassed a portfolio of 551 buildings across the United States with a current market capitalization sitting at $5.74 billion. Stag Industrial, having been hit very hard recently with this volatility, their stock share price has fallen from a high of $48 per share to roughly $30 per share, creating a 37% change. That is an opportunity, in my opinion. If you give this REIT some time to rebound, allowing for an economic recovery, I am sure analysts are right on the money with an average stock share price of $45 per share and a high stock share price at $50 per share. As we speak, I have 29 total shares worth of Stag Industrial, and I'm going to continue to dollar cost average my way into this position. It has a current dividend yield of 4.58%. I received a dividend paycheck for $3.43. Now, later that day, coming in with that double whammy, I received my second dividend paycheck. This one came in from Realty Income, ticker symbol O. Now, if you've been following along on my journey, you know how much of a fan I am in particular of this REIT. It is an absolute powerhouse. They focus on single tenant commercial properties. They were founded back in 1969, and they've been able to scale their portfolio to over 11,000 properties throughout the United States, Puerto Rico, Spain, and the United Kingdom. As one of the industry's largest net lease solutions REITs, it has a market capitalization sitting at $41.73 billion and only continues to expand both in and outside the United States. Realty Income slid during recent volatility. However, it was once at a high of $75 per share before coming down to its current share price around $68 per share, roughly a 9% change. Now, analysts are expecting its share price to come right back into the 70s at an average stock share price of $76 per share and a high stock share price at $78 per share. But I'm set as for now with my current share count at 102 total shares. Their dividend yield is at 4.17%. I received a dividend paycheck for $25.43. Now, a handful of days later, on June 20th, I received a dividend paycheck from McDonald's, ticker symbol MCD. What is that tune again? Ah, yes, that one. And it truly is a dividend investment that I am loving more and more each day. We're talking about a globally recognized, beloved fast food chain that has only ballooned in size since their founding in 1955, amassing a market capitalization of $183.23 billion. And while yes, McDonald's faces its fair share of challenges as they navigate through location closures in Russia, labor shortages in the United States, and inflated food prices, one thing remains true: their 40,000 plus locations will keep consumers coming right back through their doors, translating into revenue growth that climbed 10.7% year over year to $5.67 billion in quarter one alone. Now, as for their share price, with the market as it is, uncertain and fearful, it has fallen from a high of $271 per share down to around $246 per share, roughly a 9.2% change. Its PE ratio is sitting at 26.2, which of course could come down, but in my opinion, price is what you're going to be paying, whereas value is what you'll get. Analysts are foreseeing that share price of theirs rising to an average of $283.32 and a high stock share price at $314 per share. Now, until it gets there, shareholders of McDonald's can enjoy a reliable dividend at 2.2% of a dividend yield. Now, for owning 3 shares worth of McDonald's, I received $4.19. Jumping to the 24th of the month, we had another double whammy of a dividend payday, collecting 2 dividend paychecks. The first coming in from Bank of America, ticker symbol BAC, which is America's second largest bank by total assets of $2.52 trillion, and in my opinion, has been a tremendously strong investment. They are sitting at a market capitalization of $256.69 billion. Over the last few years, of course, they've been tested time and time again, mostly impacted by near zero interest rates, which prohibited them from climbing up that revenue ladder, as banks predominantly make all of their money through collecting interest on loans. However, with an economic turnaround in sight and interest rates rising, banks across the board will perform very well, so we might as well pick them up while they are still discounted. As for Bank of America, it is down from a 52-week high of $50 per share, currently trading for around $31 per share. That's a 38% change with a PE ratio all the way down at 9.1. This is a steal of a deal in my opinion, and a stock in focus for me at the moment, especially as analysts look into their future at an average stock share price of $46.22 and a high stock share price at $51 per share. Currently, I hold 32 shares worth of Bank of America within my portfolio. Their dividend yield is coming in at 2.51%, which allowed me to receive a dividend paycheck for $6.89. Now, as for that second dividend paycheck that came in on the 24th, it came in from Lockheed Martin, ticker symbol LMT, an aerospace, arms, defense, and information security technology leader that has become one of the largest government contracted companies, not only securing business from the United States, but of course internationally as well. Since its founding in 1995, Lockheed Martin has been able to grow exponentially, quickly amassing a market capitalization to $111.47 billion. It is an incredibly reliable investment opportunity that just never seems to stop securing government contracts, whether here in the United States with a $2.3 billion Black Hawk deal, or we can go abroad where Greece just purchased 20 F-35 fighter jets. Lockheed Martin is surely here to stay. Now, I personally invested into Lockheed Martin prior to the recent run-up, and I'm happy to see its share price coming back down amidst the current volatility, falling from a 52-week high of $480 per share down to around $430 per share, creating a 12% change. Now, that PE ratio of theirs is below 20 at 18.5, but is certainly looking better to me. Analysts are predicting a rebound at an average share price of $500.67, and an even higher target price of $515 per share. If Lockheed Martin does in fact come down some more, I will surely be picking up more shares, but for now, I'm going to enjoy that dividend of theirs coming in at a dividend yield of 2.61%, which allowed me to collect $14.20 for only holding 5 shares. As for the last 2 dividend paychecks, they came in from Vanguard Funds, the first being Vanguard's Total Stock Market Index Fund, ticker symbol VTI, and the second being Vanguard's Total Stock Market Index Fund, Admiral Shares, ticker symbol VTSAX. They are very similar funds, so I'm going to speak to both of them and sharing that they both have over 4,000 stocks within them, with a great balanced mix of value and growth investments ranging from small, mid, and large cap companies. We're talking about companies like Apple, Microsoft, Amazon, Google, Tesla, Berkshire Hathaway, Johnson & Johnson, United Health, all leaders of their respective industries, ensuring overall reliability in my opinion. That's just a fail-safe basket of stocks that you can invest into that you're not going to be losing a second of sleep wondering if your ROI will ever hit your portfolio. Now, I own 64 total shares worth of VTI and received a quarterly dividend paycheck for $48.10. And as for my VTSAX investment with 225 shares, I received $196.32. Now, YouTube, that is it in regards to all of the dividend paychecks that I've received throughout the month of June. As for that monthly total, make some noise for another record-breaking month here, because I received a grand total of $244.42, which for doing absolutely nothing is exactly why I love being a dividend investor. But better yet, if we jump over to my dividend tracker, you can see that we not only doubled last year's June income, but we are now roughly $136 shy of last year's total dividend income. Making passive income could not be easier, and for that reason, I am all in on dividend investing. Now, I'd love to know your thoughts if you have these stocks within your portfolio or your top 3 highest paying dividend stocks. Drop all those comments down below to let me know. And before we wrap up and close out for today, go ahead, tap on that thumbs up button to help me grow this channel. I'd love to have you also subscribe to the channel and have you join me on the journey. Go ahead and do so now. Now, YouTube, until the next video, I will see you all there.